Hello everyone. I am sending you this hopefully quick video so you can understand what information I will need in order to do your health insurance renewal through the New York State of Health. This is a client of mine, or at least this was a client of mine, who is deceased. But I'm going to use his account as a way to let you know what it is that I'm looking for. So I'm going to tell the government that he is no longer deceased. He is raised from the dead. And go in. All right, so what it asks for, the income or introduction to income section. The first thing that they're going to want me to know is how you're going to file your taxes. Are you filing single, married filing jointly, married filing separately, so on and so forth, right? If anybody is married filing separately, you do not get the advanced premium tax credit or the discount that applies. So if you're married filing separately, you don't get it. Married filing jointly, you do. Head of household if you're a single parent and have children, so on and so forth. If you do have children, and I have this section, obviously Ryan here didn't have any kids, but if he was married filing jointly and his children were over the age of 19, anybody 19 years and under can get Child Health Plus. The month after your 19th birthday is going to be a essentials plan if you're making less than 37,650. So in this section, if I claim married, filing jointly, right, it is the entire husband and wife and children. So you and I both know that if you do have children, they're usually just emptying the refrigerator, not actually contributing to the household income. The government considers anybody that you claim on your taxes as income. So if a husband's making 50,000, the wife is making 50,000, and Junior's making 15,000, that is $115,000. If I put them all together on here and I just say married filing jointly, but Junior is a single, even though it's still one application on here, then husband and wife are only making 100, Junior's only making 15, he will get the essentials plan, and then husband and wife only can get a husband and wife or a subscriber and spouse is what we call it. Just kind of give you an idea how taxes play into this. Anybody that you claim on your taxes, right, their income, whether it's $2,000 at summer camp or $50,000 a year at a job, counts as household income. And we want to divide that up as best we can in order to get everyone the least expensive plan. All right, so for him, we're going to claim single. Moving on. All right, so income, they're going to pop up. Anytime that you have a job, a W-2 job, you work for an employer, not that you're self-employed, but if you have a W-2 employer, we have something called a wage hit. Anytime they take Social Security and Medicare out of your paycheck every week or every 2 weeks, and they pay it to the government, it's called a wage hit. And the government can see what company it's coming from. So then we have to put in there, yes, he has earned wages. Yes, it is from this company. This is also from every company that you worked in. Now, excuse me, when you're getting this at the moment, they're looking for me to estimate all of 2025, January to December. If I was doing this for this year, 2024, I would need to know if you worked at McDonald's from January to February, then you worked at Burger King from February till June, and then you worked at Wendy's from June till December. I need all three totals because they need to know your annual income, your adjusted annual income. If I'm doing this for you in November for the renewal for January 1st, 2025, I need to know estimated from January 1st till December 31st. So if you tell me you're going to make $50,000 a year, I put in 50,000. If at year end you have made 60,000 and they have given you an advanced premium tax credit, that discount based on 50, they will want some of that money back. So if you said 50 and you made 60, $10,000 difference, they're going to say, hey, listen, you're probably going to owe us $50 a month every month that we overpaid you. If you make 50, or if you tell me 50 and you make 40, they'll tell you to guess better next time. So it's better to be as close as you can in order to not have to owe money out of your taxes at year end. That's why it's called an advanced premium tax credit. So it's an advance that you get out of your tax return that is used for monthly health care premiums. Okay? Now, if you can see, I can put in here full-time, part-time. This was seasonal. So basically from January until March is what he worked, and this was his income, and this is what he did. If it's full-time, I can base it on $15 an hour for 30 hours a week, and it'll calculate. The problem with this calculation is it assumes that he worked 15 hours a week, 30 hours a week, every single week for 52 weeks. If you took a 2-week vacation, if you were sick for a week, if you went on a maternity leave, right, then it has to be past employment, and I have to say that he was January to March, and then I can say he also worked then October till December, so that I can put the 2 stints in to make sure that you're not overdoing the amount of income that you have. This is probably more information than a lot of you want to know, but this is why I have to ask for those pay stubs. It actually asks me to upload them, and what they're trying to do is get an estimated income for your year. Like if you work a solid month and you get paid every week, they're going to take those 4 paychecks, average them out, and multiply times 12. That's just how the computer does it. Obviously, I can think, and you and I can discuss how to get around that. So we'll move on. This is earned income, W-2 wages. If you are a self-employed person, this income is going to come from your Schedule 1. They're going to look at your business income. Right? So let's say your business made $30,000. Right? I put in $30,000. I understand there's deductions. Right? So this is earned income, self-employed, $30,000. Next, we look at benefit income. This is for anybody who has Social Security retirement. If they took Social Security before 65, that counts. If they're on disability, if there's a child who lost a parent who's getting survivor benefit, unemployment, this all counts in these benefits. He doesn't have any. Now, additional income. There's a whole list. Taxable interest, tax exempt interest, ordinary dividends, capital gains, IRAs, pensions. Nobody here is going to be, we're living in Alaska, so you shouldn't get those. Taxable refunds, alimony, business income. We also have business loss. So if you're owning an S corporation, you had a loss this year, I can put in a negative number that will decrease your income. Same thing with a capital loss if you lost. There's a whole lot of things that go in here. Cancel. He's not going to have any additional income. This is the fun part. Income deductions. So this is where those self-employed people, or W-2, if you're an educator, if you put money into an IRA, if you have student loans, business expenses, I can get right off of your Schedule 1. The deductible part of self-employment tax from your Schedule 1. Self-employed health insurance deduction. If you're self-employed but you pay for health insurance, you can actually get a deduction for that. All right, alimony paid. All right, you get a deduction for that. There's a lot of different things. So basically, it's almost like doing a tax return. All right, keep going. No. Moving on. All right, household summary. It tells me where it is. And then we move on to medical expenses. I just wanted to make that quick video, even though it's 8.5 minutes long, right, to kind of explain to you what it is that I'm looking for when I'm trying to get your estimated income to figure out your taxes for next year. In this, I will also connect a link that tells you how to make an appointment with me and how to upload that information, or how to fill out a form. Let me know what that is so I can do this quickly. If you have any questions, please give me a call directly, 585-210-3168. Thank you.